Financial performance analysis of HNB. Our competitive companies are BOC, Commercial, and Sampa. When we move on to our content contains four categories: introduction, financial analysis, non-financial analysis, and conclusion. HNB Bank is a public limited liability company which was incorporated in 1970 under Companies Ordinance. The bank was established in 1888 as the Hatton Bank. The HNB is a premier private sector bank in Sri Lanka in terms of assets, deposits, branches, and employees. Under the programs, HNB Bank introduced its own microfinancing program known as Gami Poguduwa, with aims of poverty among the rural community. Another program linked with children and youth to the bank through the Nana Poguduwa. HNB, in partnership with government, are looking at uplifting the livelihood of more than 600 families in the village of Yaya 6 in Mahavilachir. Prima is another milestone of the digital banking era. Prima is a mobile financial application introduced by Nation Trust Bank. It allows to do bill payments, mobile-to-mobile funds transfer from any bank accounts. When we move on to our key financial highlights, HNB shows 116 billion as a gross income in 2020. 1100 billion illustrated as a profit for the year. Total assets of the HNB is 1,292 billion. There are 551 branches can see across the island. There are 563 ATM centers can see around Sri Lanka.
Profitability measures. The profitability measures are really important because the profitability measure shows the efficiency of the organization and how much profit against the asset and other total revenue and things. So let's move to the first profitability analysis. Operation profit margin. The operating profit margin is the ratio between the gross profit of the organization to due to the total revenue of the organization. In banking sector, we take the net operating income against the total revenue of the organization. You can see in HNB organized in the bank, you can see in 2018, 19, 20, it continuously dropped. There might be a reason why, because when we say the other banks, the BOZ, Commercial, and Sampat, you can see the same as there's a continuous drop during the past 3 years. The main reason for this one is maybe the outside factors such as either East attack and also the pandemic situation in 2020. So when it comes to the net profit margin, the net profit margin is the ratio between the profit before tax against the total revenue of the organization. So same as the operation profit, you can see it was continuously dropping. So when it comes to the total revenue amount in 2000, when compared to 2018 to 19, there's a slight higher than 2018, but when compared again in 2020, it reduced. So it's kind of operation factors also involved. So let's move to the next factor, the net interest margin. The net interest margin shows that how much we have received as interest and how much we have paid as interest against the average asset in organization. So the average assets mean how much assets we had in the beginning of the financial year and the ending of the financial year, the average of that. So you can see in 2018, 19, and 20, there's no any such difference. For example, 2018, that is 5%, and in 2019, again 4%, and 2020, again 4%. That we can see across the other bank as well, for example, BOC, Commercial, and Simple. So that is about the profitability analysis. Thank you. Over to you.
Another very important profitability measure of a bank is return on asset. Return on asset gives investor an idea how effective the bank uses its assets to generate income. We can see that HNB's return on asset drops from 1.52% in 2018 to 0.9% 95% in 2020, mainly due to the decrease in profits while increasing asset portfolio. We can also see similar drops from all other banks. Now we look at the return on equity of HNB and other banks. Return on equity indicates how effectively the bank generating profit from the investors' money. We can notice that HNB's return on equity was significantly less compared to all other selected banks over the last 3 years. 8.77% of return on equity of HNB in 2020 is much less compared to the 10.9% of the banking sector average. Now let's look at the efficiency measures of banks. The ratio of total operating expenses to the total operating income indicates how well the bank management controls overhead expenses while increasing the income. It's the cost to income ratio of a bank. It's very interesting to note that all selected banks, including the HNB, maintain very good cost to income ratio over the years, except the Sampan Bank in 2020. Now let's look at the management measures. Non-performing loan ratio is a debt management measure of a bank. The non-recovery of loans affects not only the further availability of credit, but also financial soundness of the bank. We can see that all the banks suffered increase in non-performing loans during 2019 and 2020 mainly due to the government's directions to give debt moratoria to business sector during this unprecedented time.
Now we'll move into the leverage measures, and under that, loans to deposit ratio. This assesses the bank's liquidity by comparing the bank's total loans to its total deposit for a given period of time. And if the ratio is too high, it means that the bank may not have enough liquidity to cover any unforeseen fund requirements. And in the other way, if the ratio is too low, bank might not earning as much as it could be. So HNB has maintained its loans to deposit ratio around 80% to 95% over the years, and similarly in the other banks as well. Then the investor measures, and under that, net assets value per share. This is a real estate matrix which obtained by dividing the net assets values of the bank by the number of outstanding shares. And value of HNB has slightly increased over the years, which is 261.73 in the year 2020. And BOC has taken quite a high value due to its less share base. And then the earnings per share. This indicates how much money a company makes for each share of its stock. And in HNB, value has decreased more than 20% due to less profits over the years, and similarly in the other banks as well due to the effects of pandemic. In the price earnings ratio, this is the ratio for valuing a company that measures its current share price relative to its earnings per share. And HNB has taken a value of 5.65, which is slightly higher than the previous year, but less than 2018. And this rate is similar in other banks as well, except BOC.
Okay, let's look at the next ratio. It's about dividend per share. This is the kind of important ratio for an investor to make their own decision to invest in a company. So this ratio important us to look at the company's long-term growth as well as the stability in the company. When we talk about the data extracted from the annual reports, that it's clearly show us that BOC is having a high dividend per share compared to other companies. This is mainly because they are not trading their shares on the market. Instead of the debentures they are trading. So the dividend per share they have declared for the government, and it has been decreased from 260 to 63.9 throughout the period. When we talk about the HNB also having reduced their dividend per share over the period. This is because they are having less profit throughout the period. Let's look at the next ratio. It's about dividend cover. This is the ratio, one of the ratio. It's associated with the risk which the investors have in receipt of the dividend for a share. So we can calculate it by earnings per share divided by dividend per share. So when we looking at the data, it's clearly show that POC is having a high level of dividend cover, and HNB, it has been reduced over the period of time because the earnings per share has been reduced throughout the period. Next ratio is market to book value ratio. It's showing that value comparison between market share price and the book value of the share. So in the BOC, it indicates there's a constant amount of 1. It's because there is no market value for their shares because they are not trading it in the share market, and it's 1,000 for the from the book value. It's constant throughout the period, and when we looking at the HNB values, it has been reduced over the period of time since their share prices has been reduced over the period of time. Dividend payout ratio. When we looking at the dividend payout ratio, this is indicate how much of the earnings we are declaring as a dividend out of the dividend. So when we looking at the data extracted from the annual report, it can be seen that HNB has increased their dividend payout ratio. It's a good sign for the company because that investors are having confidence over the company that they are declaring higher amount of dividend out of their earnings. So when we look at that, the BOC, it has been reduced from 23 to 9, and HNB, it has increased from 27% to 31% throughout the period.
Earning yield. This refers to the percentage of earning per share for the year divided by current market price per share. This metric is used by investors to determine which assets seem underpriced or overpriced. The low ratio may suggest that a stock is overpriced, and high figure may suggest the stock is underpriced. Let us now look at the comparative analysis based on the last 3-year data. HNB and commercial has a significant growth, but HNB growth is higher than others. Therefore, it's clear that to maximize the return and better should invest in HNB. Regulatory measures. This means any law, regulation, policy, rules and procedure or similar administrative action by a party. These changes will affect to increase the cost of operations in business. Capital adequacy ratio. This measures a bank's financial strength by using its capital and risk-weighted asset. The higher the ratio is, more likely a bank can survive in negative shocks in their balance sheet. So based on the result, HNB is less likely to fail in unexpected loss occur. Total capital adequacy ratio. There also HNB has a significant growth, and 2020 it is in higher position. That means HNB has a low risk compared to the other bank.
Hi, I'm Shehan, and I will be discussing the non-financial analysis of the HNB Bank. I'll be discussing the human capital, social capital, and natural capital. Talking about the human capital, there's a gender diversity of 57 to 43% of male to female ratio and 22% representation of females in the senior management. The employee training investment was 13.3 million rupees in 2020 and 22.2 training hours per employee in 2020, which is a reduction compared to the previous years, mainly due to the COVID-19 pandemic. The employee retention is at a high 94%. HNB also prides itself in employee engagement by fostering open culture, as well as knowledge sharing initiatives such as From the CEO's Desk and Hatna Magazine. Psychological well-being programs are conducted online during the pandemic, as well as health camps to ensure employee health and safety. There have been no salary cuts or job losses during the pandemic, and permanent employee cadres are offered loans at concessionary rates and medical allowances. Talking about the social capital, the number of customers has increased by 40,000 in 2020, and the net promotion score or the customer satisfaction score was at a high 77% compared to previous years. HNB also provides customer support by granting concessionary working capital loans of over 24 billion rupees. The HNB COVID Relief Fund was established in 5 billion rupees to support SMEs. And Apigo, a platform, was launched to provide end-to-end e-commerce capability to SMEs. Customer engagement has been streamlined by the HNB Connect call center, which functions 24/7, and service help desk and support groups are also established for customer grievance handling. The CSR investment in 2020 was 25 million, which was exponential growth compared to 2019. HNB Bank also supports sustainable development goals of the United Nations by providing loans for regions under the poverty line, healthcare and educational development, as well as funding clean drinking water projects. The talking about the national capital of HNB Bank, carbon footprint was 3.7 kilograms per square feet in 2020, and it was a major reduction compared to 2019. The energy consumption has also reduced compared to 2019 from 16 million kilowatts per hour to 40 million kilowatts per hour. HNB also prides itself in completely recycling its paper, and paper usage has been reduced by 140 kilograms in 2020. The lending portfolio of renewable energy has increased from 4.8 billion LKR to 12 billion LKR in 2020. There have also been green CSR initiatives such as awareness programs to SMEs on benefits of environmental sustainability, tree planting campaigns, and e-waste campaigns that have been conducted. HNB also has a green policy called the HNB Green Pledge, where all employees pledge their allegiance towards environmental conservation. All the projects of HNB are assessed by an ESMS unit, assesses the risks, the social goodwill. Suppliers are assessed and qualified based on their green policy as well. So this is an overview of the human, social, and national capital of HNB Bank. Thank you.
In HNB, corporate governance framework is considered based on 4 major aspects. First, driving performance and growth is conducted by robust governance structure and well-established management body headed by the board of directors, followed by managing director, CEO, and several management committees. Corporate management and effective decision-making conducted through regular and effective board meetings with an agenda set by the chairman focusing on areas need to be addressed, and minutes of all preceded meetings circulated and board decisions and actions followed up through an action tracker. Second, provision of effective control to avoid financial loss or reputational damage conducted through comprehensive policy frameworks to serve as a guidance to behavior and decision-making, segregation of roles and responsibilities to ensure a balance of power within the board and accountability of actions, risk management, and other internal controls. Board is aware of its duty to comply with laws, regulation, and internal policies and procedures of the bank. Third aspect, in navigation through crises and rising above the challenges, HNB remains guided by its principles. HNB is committed to the high standard of integrity and ethics and has nurtured a strong culture of compliance and good conduct through a legacy of advocating and incentivizing employees for doing the right business in right. Finally, fourth aspect, for driving sustainable business as a responsible corporate citizen, HNB is committed to fulfill its purpose as a catalyst of socio-economic progress in the country. Instead of focusing economical, social, and governance consideration had led a shift away of stakeholders' primacy to a balanced commitment to all stakeholders for a sustainable future. When considering the competitor analysis of Porter's 5 forces with regards to HNB, threat of new entrants is moderate, considering barriers to enter into the banking industry, regulatory and capital requirements, and most importantly, earn the trust of public to deal with their money and financial information. Power of buyers is high with respect to the challenge of retaining existing clients who are the buyers of the company, impress them and win customers' interest as well as obtaining new customers. Power of suppliers is also considerably high since the primary source of capital is supply through customer deposit, mortgage and loans, mortgage bank securities, and loans from other financial institutions. And most challengingly, utilization of resources to serve customers' borrowing needs while maintaining enough capital to meet withdrawal expectations. Trust of substitutes is moderately high due to the non-financial competitors such as investments in gold, stock in investments, digital currency investment, etc. Finally, banking industry is considerably highly competitive. Since the financial service industry has been around for thousands of years and just about everyone who needs banking services already has them. Because of this, bankers attempt to lure customers away from competitor banks by offering lower financing, higher rates, investment services, and greater convenience than the rivals. Therefore, banking competition is often a race to determine which bank is offer better, both best and faster services.
In the next upcoming slides, we are going to look at the banking industry analysis in the perspective of macroeconomic overview, industry overview, and credit growth. To begin with, macroeconomic overview. As we all know, the past 3 years has not been very favorable for the Sri Lankan economy, especially because of two incidents. In the year 2019, we encountered the Easter Sunday terrorist attack, and the year 2020, we encountered the coronavirus pandemic. Both those incidents affected majority of the important stakeholders of the Sri Lankan economy, especially for, in fact, the Easter Sunday terrorist attack impacted one of our most lucrative and prominent sectors of the economy, which is tourism. So therefore, as you could see, our GDP growth rates have been very stagnant, below 5% average over the past 3 years. And in fact, our public debt has been appalling for the past 3 years because the government has been borrowing from other countries and institutions. The government revenue has weakened, and also the expenses of the government has increased because they've been spending for economic revival activities from the coronavirus impact. And even the balance of payment has not been very much favorable because the export sector was mainly affected from the coronavirus pandemic due to travel restrictions. And as a fact, government has to impose import restrictions to balance off the payment situation in our balance of payment account. As we move on to the banking industry overview, we could see in Sri Lanka, the banking sector consists of 24 licensed commercial banks and 6 licensed specialized banks. And the total asset base of the sector is 14.7 trillion as of 2020. And the Sri Lankan banking sector, there are 4 key players. That's Bank of Ceylon, People's, Commercial, and HNB. That consists of 2 state banks and 2 private banks. They are also known as domestic systematically important banks. As you could see, the non-performing loan ratio of the banking sector in the past year has increased up to 5.4%, mainly due to debt moratoriums. And their net interest incomes has reduced because the margins of the interest rates have weakened. Also, as a fact, the slower credit growth and the debt moratoriums again have impacted the banking sector slightly. However, they've managed to maintain their capital adequacy ratio at the rate of 16.4%, which is well above the regulatory requirement of 12.5%. And also, despite the economy as a whole has been going through a tough time, banking industry has in fact recorded net profits by 14.9% and the liquidity ratio up by 4.7%. As we move on to the credit growth of the banking sector, we could see the Central Bank of Sri Lanka introduced various concessionary measures to ease the financial distress of the people. As you could see in the graph, the private sector credit demand has not grown despite the policy cuts. And as we proceed to the next chart, we could see, in fact, the growth in private sector credit has drastically reduced over the past 3 years. But the chart 3.2 shows us a different picture. The loan growth of large banks have increased as compared to medium and small banks. That is mainly because facilities such as Saubhagya COVID-19 Renaissance have mainly got dispersed to large banks, which is Bank of Ceylon, People's, HNB, and Commercial, in compared to medium and small banks. Therefore, as a whole, when we consider as an economy, as an industry, banking loan growth has drastically reduced over the past 3 years. So as we move on to the conclusion of this, So in conclusion, just to summarize the fact that we mentioned above, we analyze the financial analysis of HNB in the perspective of profitability, efficiency, debt management, leverage, investor and regulatory, and the non-financial analysis in the perspective of human, social, natural capital, and corporate governance. We also identify how financial ratios assist a company to measure their financial stability, liquidity, going concern, and the adequate utilization of investor funds. Also, we identify how the recent debt moratorium increased the non-performing loan ratio of the industry and how HNB in fact managed to reduce the non-performing loan ratio by the year 2020. Also, the non-financial ratios and the industry analysis highlighted how the external factors impacted HNB to articulate its growth prospect strategies. So we hope the presentation gave a descriptive idea of HNB performance. Thank you.